America. It was another record-setting day for the stock market, and not really in the good way. At one point, the Dow was down 800 points. Looks like Washington's fixed it. The largest point loss ever, and it closes over 300 points down. Our economy is in the worst shape that it has been in decades, and at this rate, we are rapidly approaching something as bad, if not worse, than what we saw during the Great Depression. But I don't need to tell you that. I've been telling you that for the last couple of years. We've been talking about this for 2 years now, and people said we were crazy. We're not. I don't need to tell you that because if you've been watching the show, you know. I don't need to tell you that because if you pay your bills, you know. You've been trying to make ends meet. You've been playing by the rules. Who the hell is talking about your financial crisis in the way that you can even understand what is coming our way and what do you do? We're trying to change that tonight. Tonight we're going to answer all of your questions on the phone. You can get in on the discussion. You ask the question you want somebody to answer. The number is 877-SAY-BECK. That is 877-729-2325. Keep in mind, we can't answer any specific questions about specific stocks or what to do with your money specifically, mostly because I can't even really make change for a $10 bill, but everything else is fair game tonight. Joining me now is Peter Schiff, president of Euro-Pacific Capital and author of Crash Proof, How to Profit from the Coming Economic Collapse. Ali Velshi is CNN's senior business correspondent, and Stephen Moore is the economics editorial writer for the Wall Street Journal and co-author of The End of Prosperity. Okay, when I said just a minute ago that we are facing something akin to or worse than the Great Depression, Ali, I saw you nodding your head. That spooks the crap out of me.
Yeah, I think there are things that won't happen that were as bad as the Great Depression because we do have some backstops, including the fact that the government is insuring your bank deposits, which didn't happen back then. So you won't see the bank failures that you saw back then. We've seen 15 as opposed to 1,400. There's also the ability for businesses to understand it's coming and buy less stuff so they don't get saddled with it, which allows them to bounce back. But the bottom line is we are pushing up on those unemployment numbers, and that is the most serious of all these issues.
Let me give you something that was in the Telegraph. It came out today here. Germany takes hot seat as Europe falls into the abyss. We face extreme danger unless there's immediate intervention on every front by all the major powers in the world acting in concert. We risk a disintegration of the global finance market within days. No one will be spared unless they own gold bars. We are approaching the point of no return. The only way out of this calamitous descent is shock and awe on a global scale, and even that may not be good enough. Peter. Well, I mean, this should scare you.
Yeah, but what's even scarier is that the government might actually act on that. You know, one of the things Ali said, all these backstops, they're actually going to make it worse. The government is going to turn what would have been a very severe recession into an inflationary depression. You know, they're trying to pretend that there's a problem on Wall Street, and they're trying to prevent it from getting to Main Street. It's Main Street that's a problem. Wall Street is in trouble because Main Street is broke. We've borrowed too much money, and we can't pay it back. So the lenders are feeling it first. But it's the fundamental flaws in our economy. That's the problem.
Okay, real quick, let me go to Stephen Moore. Stephen, what is the world going to look like in a year from now if these things come true? What should people know and look for and say, this is what my life is going to be like?
Glenn, I guess I'm the optimist here because I think we're more headed towards a 1970s-style recession. And don't put me in the depression column just yet, but 70s-style recession is pretty bad anyway. I mean, and I grew up in Illinois. In 1982, the unemployment rate hit 12%, twice of what it is today. Don't forget, by the way, Glenn, in 1934 or so, the unemployment rate hit 25%. So at least we're a long way from that. But I agree with Peter. Washington, not just Wall Street, Washington is the problem. Where are they getting this money? We've talked about this for months on your show. Too much debt, too much government spending. So how are they going to fix the crisis? More debt, more government spending.
All right, let me go to Dave in Nebraska now with the first question on the program. Dave, go ahead.
Well, good evening, Glenn. The question that I have that, you know, I've moved my money out of the stock market and I've got it in stable funds and we've been stocking up on food, but what good is it going to do to buy gold if nobody has any money that's worth anything? I would think I'd be better to buy perishable items than go into gold.
Well, gold is money. Gold has intrinsic value. The problem with the dollar is it has no intrinsic value. And if the Federal Reserve is going to print trillions of them to buy up all these bad mortgages and all other kinds of bad debt, the dollar is going to lose all of its value. Gold will store its value, and you'll always be able to buy more food with your gold.
Ali, I have been saying on the air, for people who just don't have money, I mean, an ounce of gold is, what, $860 or $70 today? For people who don't have a lot of money, I've been saying, look, the best thing you can do is go buy things that you know you're going to have to buy, because inflation alone, if you can buy, you see a sale going on for coats or shoes for your
if you had kids, why don't you know they're going to grow, you know they're going to need clothes. I don't think it's stupid. I don't think the stock market will be the failure that everybody thinks it is. I think we go lower from where we are today.
Didn't you just say that it was going to be akin to the Great Depression?
No, I'm saying that there are things about it that will be very tragic, but I don't think we're going to. I think we have enough backstops to stop us from going into that kind of a situation. The number one problem is how many jobs we keep and lose, but the stock market will be the last man standing. Bottom line is they can make money out of anything. People can still sell goods, including perishable items that you want, so someone can make money out of that. You need to be smart about it. But you can
one of the things that has to happen, we have to lose a lot of these non-productive service sector jobs. We need real jobs where we actually make stuff. And the government is preventing this transition from happening because it won't allow the free market to function.
The free market functioning will put 5 million people out of a job.
Okay, real quick.
Temporarily.
Stephen, real quick.
The government will put them out of a job permanently.
Next question. Go ahead, Stephen.
Glenn, I was just going to say, I don't know if it's a joke or not, but the line in Washington now is this is a time to be in cash, scotch, and fetal, as in fetal position. So, I mean, there is a lot of fear out there, but I'm going to agree with, I think actually stocks, if they fall much more, Glenn, if you look at the fundamental earnings of these companies, the PE ratios are pretty good. If the stock market falls a little bit more, I'm going to get back in this market. I'm going to ride the wave.
A lot of those earnings are going to disappear, though.
All you guys, let me tell you something. America, buckle up. It's going to be a very bumpy ride. Rick in Virginia. Hello, Rick.
Glenn, thank you for taking my telephone call.
You bet.
Listen, I am a scared fella. I am terrified of what's happening to the market, and I don't have a lot of money to invest. And I'm just wondering, what exactly should I do with what little bit of money I have?
All right, there are very careful places you can invest your money. Everything from a CD to a mutual fund to a money market mutual fund to cash goes in a bank. Peter's nodding his head. The bottom line is it is safe. The government will pay those bills, and when they don't, we'll be on this show to tell you they won't get paid. You're nodding your head, too.
See, you know what? I got to tell you. First of all, I don't know how much money is very little money, but I don't believe, honestly, I, at this point, don't believe in anything.
If you don't have a lot of money, just stock up. There's a lot of food that you could buy that doesn't spoil. You can buy toiletries that you might need, razor blades, shaving cream, all sorts of stuff. Cigarettes.
You don't have a lot of money.
Even if you don't smoke, you can always exchange them later on for things that you need.
Booze and smokes will always sell.
Can I tell you something? I got booze. I'm an alcoholic Mormon. I got booze stashed all over the country.
Not to drink, but to sell. Not to drink, but to sell.
To sell, to trade.
Okay, but that does underscore the point. The point is, no matter what happens in the economy, people buy food, they buy drinks, they buy cigarettes, they buy things, and the stock market is simply a way for you to buy those. You don't have to be invested in everything, but some things will sell. Lee Iacocca's father made money during the Depression selling hot dogs. People do buy stuff.
U.S. stocks will be a buy one day, not now. They're going a lot lower, especially if you adjust for inflation.
Real quick, just give me a number. What do you think stocks are going to?
When?
In the next, give me the next 6 months.
The number I got, the Dow Jones is going to be worth 1 ounce of gold. Not in 6 months, but maybe sometime in the next 5 to 10 years. Right now, the Dow Jones is worth, what, 10,000? Gold is 850. At some point, they're going to meet. They're both going to be the same number. Whether it's 5,000 Dow, 5,000 gold, 10,000 Dow, 10,000 gold, it's happening.
What do you think?
Peter should be cloned because you can't make that stuff up.
I don't know.
It happened twice
Stephen,
in the last
give me a
century.
number. Give me a number, Stephen.
Oh, I think I'm still kind of bullish on the market. I think in a couple of years' time, when we finally climb out of this, I think the Dow is going to go up to 15,000. I'm still bullish.
I'm not looking for enough. Yeah, all right. Let me go to Judy in New York. Hello, Judy.
Hi, how you doing?
Very
Thank you for taking my call.
You bet.
We are retirees with no investments other than CDs and bank accounts, several bank accounts, one in a federal credit union. And my concern is how secure is the money in the federal credit union, insured by the and used.
Well, I don't think it's secure. I don't think it's secure at all. I mean, even if the credit union doesn't fail and you get all your money back, the problem is when you go to spend it, you're not going to be able to buy very much. I mean, most Americans are not going to be able to retire on dollars.
That wasn't her question. Your money's absolutely safe. NCUA is the National Credit Union Administration. They work just like the FDIC, although we have reports that they don't pay out as quickly as the FDIC does, which would be 2 days if your bank fails. 98% of credit unions are covered by the NCUA, which means you need to check that yours is. If it's covered, it's safe. Now, Peter's whole discussion is whether your money's worth anything, but it will be there.
But how is it? What good is having? how can it be safe if it loses its value?
That's a question about inflation. Bottom line is, she puts $100,000, they'll be there. And you're just saying that's not a good place.
Yeah, she takes the $100,000, she buys a tank of gas. Big deal.
All right. He's an optimist. More of your calls in just a second. And what the heck? Are you ever going to be able to sell your house? Coming up.
Whatever money you may need for the next 5 years, please take it out of the stock market right now, this week. I do not believe that you should risk those assets in the stock market.
That was Jim Cramer today on the Today Show. We're taking your questions on the economy live. Call us at 877-SAVE-BECK. It's 877-729-2325. Peter Schiff is with us, president of Euro Pacific Capital, author of Crash Proof, How to Profit from the Coming Economic Collapse. Ali Velshi is a senior business correspondent for CNN, and Stephen Moore is economics editorial writer for the Wall Street Journal, co-author of the book, The End of Prosperity. Stephen, let me come to you. Remember in Independence Day when they used the nuke, and everybody's like, let's just nuke them, and then it didn't work? Did that come to mind today at all when you saw the stock market?
Boy, did it. You know, I feel embarrassed. The last week, I think I tepidly endorsed this plan. Glenn, I want to apologize to you about that because...
Yeah, but you didn't think it would work, did you?
I was drinking the Kool-Aid in Washington. Everybody was saying, remember a week ago, everybody said, the market is down 700 points because we didn't pass this rescue plan. So here we are a week ago, the market's down 900 points, and we passed the rescue plan.
Right. And it's got a lot more to go. Let's go to Dawn in Michigan. Hello, Dawn. Dawn, are you there? Let's go to Dallas in California. Or maybe California in Dallas, I'm not sure. Dallas, are you there? Who do we have on the line here, gang? Nobody? Okay. Let me go to Ali on everybody seems to have an accounting, or an economics degree, and they all think, oh, well, this is fantastic. This is going to be so, we got all these fail-proof, all this is going to stop everything else. As a guy who just has my grandfather's common sense, he was a berry farmer. You know what I mean? He was a machinist and a berry farmer. That's what he did. I look at this stuff and I say, there's no way that this stuff doesn't fail, only because the government is out of money already, and now they're saying we need another stimulus package. From whom?
Right. We don't have the money, and that is the discussion that is not extended all the way over to the American people, and that is we are so severely in debt, and I know you have had this conversation, and Peter, you have had this conversation. We are so seriously in debt that somebody has got to pay for this, and when you keep on printing money and putting it in the system, it devalues the money you have, which is why we have a cheaper dollar, which is why you say that even keeping your money in the bank is not safe.
Exactly, but the government needs to level with us. You've got the president and all the congressmen coming on television saying we need these bailouts so that Americans can go borrow more money and buy new cars. We've got plenty of cars. We can't even afford to pay for the cars we already own. What we need to be telling American citizens is we're broke. We got to start saving. We don't need to go deeper into debt.
The problem is, too, Glenn, we talked about that $700 billion rescue plan that so far ain't working too good. But you know what? In Washington, there's no plan B. There's no plan B.
Oh, no. There is. They're going to bail it out and bail it out and bail it out. All of them are saying this is only the beginning. Let me go to Dallas in California. Hi, Dallas. Are you there now?
Yes, I am here.
Yes, sir.
Love your show, Glenn.
Thank you.
I'm 24 years old, just bought a house in May, and 30-year fixed loan. I got in on the 97% financing.
Ooh.
And, we had the money to put down, but, we got a 6% interest rate, 30-year fixed, 6%. The payment's only $1,500. It's only $300 more than it costs to rent an apartment in this state. I'm really worried, about, it's my first place. My wife and I have been married for a couple of years, and, I just don't want to lose everything we worked so hard to get. And we've only been in the house for 6 months. What do you do?
I don't know why you didn't just rent.
Well,
why take on all that responsibility?
Here, let me try this on for size, because that's going back to the past. You sound like a responsible guy. Let me ask this. Allie, what stops somebody from, when everybody figures out, wait a minute, everybody's being bailed out except me.
Right.
I've been responsible.
What stops you from
just saying, I ain't making this payment?
And that's the danger of this. That is exactly the danger of any kind of bailout. It does reward behavior that wasn't responsible. Now, Conrad or Dallas is making the right decision, but the point is we have fed this American dream, which might not be the American dream. Peter did say, why don't you just rent? Because we're supposed to own. Because it goes up in value and it keeps getting better.
Have we learned nothing? This guy just took out a mortgage with 3% down.
But everything else about what what he did was right. It's just
I know, but the lenders,
down payment.
The lenders should not be letting somebody buy a house and only put 3% down. We've learned nothing.
I didn't think that still happens.
We're repeating our mistakes.
Yeah. Conrad, go ahead, Stephen.
Glenn, I wanted to make a point. Do you remember those olden days, 20% down? Whatever happened to that?
I just said this.
This idea of 2 or 3% down is craziness.
Where people paid off their mortgage?
Yeah.
Yeah,
I just said this on the radio today. I remember, and what's so wrong with this? I remember when you had to save and save and save and save, and you were 30. Yeah. 35 years old before you could afford to buy a house. You had to have 20% down, and that's the way it was.
Why do you buy a house when you just get out of college?
It's the wrong dream that we've been pushing, and it's the same dream that causes you to open bank account, credit cards, and store cards.
But let me ask you guys, who here actually believes that the politicians get it? Because they're not saying it's a dream anymore. Now it's a promise. Yeah. Now this is America's promise.
It's an entitlement. It's an entitlement.
Exactly right.
But the promise wasn't just own a home. It was own a home and get rich as it appreciates.
Right.
You don't have to save because your house is going to save for you, and you can buy everything by constantly pulling equity out of your house piggy bank, your ATM machine.
That is what killed us. I can't believe how much I'm agreeing with you tonight.
Yeah. I have to tell you. Here's the thing, America. I just hope that we all look at these politicians and realize both parties, they're both involved in this, and they're feeding you lies right now. They're still telling you that you're going to get Social Security, you're going to get this, we're going to do health care. None of that is going to happen at this point.
I love
stop
this
listening
line,
to the lies.
I love this line, Glenn, that politicians say, thank God we didn't, privatize Social Security. As if Social Security is in some great shape.
I know.
There's $2 trillion in debt.
The Titanic is telling us the ship is sound. Don't worry, go back to bed.
Let me go to Conrad in Canada. Hello, Conrad.
Hi, guys. Great show.
Thank you.
Yeah, listen, I just wanted to tell you, these problems you're experiencing in the United States aren't certainly only in the United States. We got some of the same problems in Canada. For example, I've been reading and I found firsthand how difficult it is to buy a U.S. $1 gold coin, whether it be the Eagle or the Royal Canadian Maple Leaf in Canada. I just want your comments on that, please.
Well, I think they're running low on supplies because people are wising up and they're buying them. But
why isn't gold shooting through the roof?
Look, it will. I mean, don't try to figure out why it hasn't. Just buy it before it does. In the short run, markets are irrational. Look, the U.S. dollar is rising right now. It should be collapsing.
What do you think about buying silver? Because a lot of people can't afford.
I think there's a portion of your portfolio that should be in precious metals at all times.
Let me just talk to me. I'm a guy who lived, in a very modest home, working class family. We didn't have gold. We didn't have a portfolio.
Buy silver. They behave in similar ways. In fact, silver is actually used in industry, so it has more applications than gold.
Hang on to your copper pennies, the ones that were minted before 1981. They're worth 2 or 3 cents.
Glenn, I can tell you why the dollar is rallying in the last couple weeks.
Real quick,
because Europe and Japan are even worse shape than we are.
No, they're not.
Europe
hang
is a
on,
catastrophe.
gotta take a break. Back with more questions, more of your calls in a minute. It's your economy and your questions. The number is 877-SAY-BECK. That's 877-729-2325. I'm with Peter Schiff, Ali Velshi, and Stephen Moore, and we are taking your phone calls. I want to ask you guys a question. I really truly think that right now the American people, you could make the case instead of it's 9/11, go out and spend money. You could make the case right now and say, America, these are the things we have to do. We're going to have to cut our budget like crazy. We are going to slash. We're going to lose an awful lot of things right now, but you know what? We're going to cut them. And when we cut them, we're going to come to you and we're going to ask you for higher taxes. And I think you would actually have a shot at winning today because Americans know in their gut. But they're not going to give the country another dime unless they start slashing this budget.
I hope you're right, and I wish they would, because that's the reality.
Last week was the reality.
They could have done it, but they haven't done it. The presidential candidates are still talking about the cuts that they're going to make. The math doesn't add up.
No. They still want to try to resurrect the phony economy that we had. They won't let us reconstruct a sound economy based on savings and productions. Somebody could just level with the American public and let them know that we have to suffer through this recession, because if we don't, we're going to get something much worse if the government tries to keep us borrowing and spending.
Stephen? One of the big jokes of the presidential campaign, Barack Obama keeps talking about the, quote, investment deficit. He's saying government isn't spending enough. The budget is gone from $2 trillion to $3 trillion in 7 years. Where is the investment deficit? All we've been doing is spending more money on
We lost 156,000 jobs. 156,000 jobs. The government grew 9,000
It's
jobs.
unbelievable. It's the only sector of the economy that's been growing jobs has been government and healthcare.
We have to support. They don't produce anything. We have to support them.
Exactly.
They're a drain.
Let me go to Marilyn. She's in North Carolina. Hello, Marilyn.
Hi. I know everyone's been talking about the crisis, and my concern is I'm a disabled veteran. What's going to happen to individuals like myself that rely on that government pension to survive?
You're going to have a tough time because the value of that pension is going to erode through inflation. You're going to see your cost of living just go higher and higher and higher. And unfortunately, it's going to be very difficult for you. And I really feel for people in your situation, the government is shooting at you.
We already have. I mean, this is a real sad thing. Social Security. I mean, gang, come on. Nobody believes you're going to get Social Security. You're not going to get it. Period. You're not going to get it. For those who are on Social Security right now, you're in a real problem and a real bind because inflation.
Yeah, by definition, it is the most fixed income. And as Peter says, we've seen this problem. We've been eating away at our ability for a dollar to buy what it did a year ago, whether it's energy prices or food, and nobody thinks that's going to stop. Sure, we're celebrating that oil's a little under $90 a barrel. Still a whole lot more than it was a year ago.
Stephen or anybody, do you guys at all think, I've been talking about the perfect storm. It's not just the economy, which is different than it was in 1933 or 1929. It's different. The fundamentals aren't there. We don't have the steel industry, et cetera, et cetera. But you also have England now on critical alert. You've got enemies all over the country that are coming at us. You don't have cheap energy anymore. You've got Russia and Iran and everything else that want to be able to push us over the edge. How do you not?
It is dangerous for a country of this size and importance to be economically vulnerable.
Because you know what happens, Glenn? I'm the optimist here. I'm not one of the four horses of the apocalypse. I think that our country, we always come to the right solution. But we always do all the wrong things first. But ultimately, we come up with the right plan.
We'll be
going
back
to do that here. It may take a couple of years.
The fundamentals of the economy aren't sound, and we're going to have to do a lot of work moving forward. So if we can stop the bleeding with this package, implement it effectively, and then move forward to deal with the broader problems on Main Street, then hopefully we can start getting our economy back on track.
We are facing the worst economic crisis ever, and these guys are in fairyland. The Dow has suffered its biggest single-day point loss in history. That's the second time in 2 weeks that we've reset that record. Everybody's talking about this mess, and nobody is talking about it, I think, with any kind of credibility. The same experts that were doing all the talking are the same guys that have been calling me crazy for the last year and a half. Plus, if you're a hedge fund manager, maybe you understand all the financial lingo, but, I don't. I'm a big fat dummy. I spent 2 years trying to figure out what the hell all of this means, and you know what? The minute you start getting into all of this this financial talk, you're talking nothing but mumbo and jumbo to most people, right? And people have no idea what you're talking about, and you're not making common sense at all. Who's saying things in a way that we can understand? Tonight, we're trying to do that. We're trying to answer your calls, your questions live. The number is 877-SAY-BECK. That's 877-729-2325. With me tonight, Peter Schiff, president of Euro-Pacific Capital and author of Crash Proof, How to Profit from the Coming Economic Collapse. When did you write that book, Peter?
3 years ago. Came out 2 years ago.
Stephen Moore, economics editorial writer for the Wall Street Journal. He's Mr. Happy Pants today, although he doesn't look like it. He's the co-author of The End of Prosperity. That doesn't sound real hopeful.
I just wrote it. Perfect timing, huh?
And joining me now is Bob O'Brien, stocks editor for Barron's Online. Let me go take a phone call here quick. Let's go to Lynn in North Carolina. Hello, Lynn.
Hi, big fan.
Thank you.
I have a question, and this is for just people like me, Joe Schmo, working part-time at a grocery store trying to make ends meet. When they talk about this bailout, and they say that the government is going to take on all this bad debt, and I know that's not just asset-related debt. There's a lot of signature loans, credit card debt, that kind of thing. If and when they do this, they take it over from these big banks like Bank of America, Wells Fargo, things like that. How is that going to affect, say, the people like me on my end who are getting the collection calls and the credit calls and is that going to go away, or are we going to start getting calls from the government?
Well, the hope is that this will stop the bleeding, that these banks won't, there's a fear that there's a domino effect and that you'll have one bank after another fail. So the The idea here is to stop that bleeding by getting rid of their bad assets. But guess what? Guess who's taking them over, Glenn? The taxpayers. And I guarantee you the taxpayers are going to overpay for these assets. We're going to be taking on the most toxic assets. The banks are going to get rid of their worst ones, throw them in the taxpayers' laps. How does that make any of us much better off?
I saw something in the New York Times that said the Treasury now is trying to decide how to not overpay for those assets that are truly worthless. Why are we paying anything for them?
The whole point of the bailout is to overpay. If they don't overpay, they're going to bankrupt the entities that are selling. But the answer,
but you know what? There are still people in Washington saying that this is going to be a bargain for the taxpayer. It's crazy.
They're just lying. To answer the caller's question, the way she's going to get hit is because in order to buy all this bad debt, the government has to print money. So they have to debase your wages. They have to drive up the cost of living for average Americans so they can bail out these lenders.
Make no mistake, America. Let me tell you something. Washington has sold you down the river, sold all of us down the river, and they've done it for power. Both sides have done it for power. They wanted to make sure the American dream was alive and well. They knew this wasn't coming. You couldn't not see this tragedy coming. Ginger in Wisconsin, go ahead.
Yes, I'd like to know, what is the difference between a recession and a depression?
Well, you know, a recession is when your neighbor is out of a job, and a depression is when you're out of a job. And remember when Ronald Reagan said the recovery was when Jimmy Carter's out of a job. So maybe it's when Congress is out of a job.
We're all about to find out the difference. But, you know, I think a depression is just a very severe, long, deep recession that doesn't go for quarters, but goes for years. And I think at the end of the Barack Obama administration, we'll still be in this thing. It's going to be worse.
You say what you said off the air. You said that you thought that there was a possibility that we don't survive the next 4 years.
Well, I mean, the dollar. I think we're going to have a major crisis in the dollar. There's going to be, you know, the dollar will collapse, and that will send long-term interest rates and consumer prices much higher. See, the problem, Barack is right that the fundamentals of the economy are not sound, but he's going to make them less sound.
Right.
He wants to put the economy back on track. The problem is that track is leading to a brick
wall.
What? We need a whole different track.
Say anything else? No, I mean, they're both saying the same damn thing.
Well, and you know, the question about a depression versus a recession, if you think about what happened in the 1930s, 25 to 30% unemployment.
Right.
That's 5 times worse than what we've got now. If you're bemoaning 150,000 jobs lost, imagine how you're going to feel when we start to talk about 450,000 jobs lost in any period.
Remember, but these numbers are all phony today. Unemployment is probably a lot higher than that, as is inflation. Yeah, sure. It's not as bad. Unemployment is not as bad as it was during the 30s, but we'll see. We might get there. Remember, this is just the beginning. It wasn't that bad in 1929, 1930. Yeah. We're at the early stages of this. We'll see how it is in 3 or 4 years.
And don't forget what made it so much worse, Glenn. You've read Amity Schleye's book. She talks about how everything the government tried to do under Franklin Roosevelt and under Herbert Hoover made the crisis worse. That's what worries me the most.
Barney Frank said that as soon as the election's over, they're going in for major surgery on this. I mean, why would you invest in this? Here, I mean, the hedge funds. The hedge funds. I don't want to sound like CNBC here, gang, but a lot of your retirement funds are in these hedge funds. How do you keep these things stable when people are investing in there because there's no regulation? And then you have governments coming in and saying, you know what, we're going to start regulating. People are going to pull that money out of there.
They banned the short selling, but does it stop the market from going down? You know, one of the unintended consequences of short selling, one of the reasons that these declines are so violent now is because the shorts are not there to cover.
Right.
They took away the buyers.
Let me go to Greg in North Carolina. Hi, Greg.
Hey, good evening, Glenn. Hey, so my one comment here before my question is that, you know, capitalism is built on these moral pillars, and I think today part of our struggle is that we have moral relativism, and this is the consequence of it.
Right. But and capitalism can heal itself if you let greed. When greed takes over, it collapses on itself. You let it collapse and punish the people.
Greed is normally balanced by fear. Right. But the government took the fear out of the equation by guaranteeing everything, by letting everybody think there was no consequences and no risk.
All right.
That's what killed it.
Greg, go ahead. What's your question?
So my question is tonight, how are we going to see inflation, stagflation, deflation? I mean, how is it going to take? You know, Glenn, you've talked on your show the last couple weeks about, you know, we could have just rampant, out of control inflation, and I guess that's kind of counterintuitive to what we think of in a recession in terms of deflation.
Because we're coming on this period with fiat currency. You know, during the 1930s, we had real money. We were on the gold standard. We were on the gold standard for 200 years until 1971. But now we have fiat money. The government just creates money out of thin air. It has no value. And the way they're going to pay for all these bailouts is by printing money. And that's inflation. The result of inflation is that prices go up. But the real crisis is when all the people around the world, in Japan and China and Saudi Arabia, don't want to hold our dollars anymore. And then the dollar really goes down and prices just go through the roof.
Okay, Stephen, let me, and Bob, maybe you can answer this. As I've understood it, the Fed only has a few things that they can do. They can open up the valves and they can make money shoot out.
Right.
But at some point, and we passed this point, you got to shut those valves off. Otherwise, you can no longer control up and down. You can no longer control the value. Once you try to turn those valves off, if you could still control it, which they can't, you close those valves. You have to close them as much as you opened them to balance. So in other words, as low as we have forced interest rates down, we have to go that amount of time higher.
We should be raising rates now, but we're not.
But we're not going to. You know, with the next move on the part of rate setters, not just here, but around the globe, there's going to be a coordinated global effort by central banks, Bank of England, the European Central Bank, Bank of Tokyo, all going to work.
What we need is more savings. How do we get more savings when we punish savers and encourage borrowing?
That's the problem. I mean, we're very much in a 1970s style economy where the unemployment rate goes up, so they print more money to put more people to work. That causes more inflation. That puts more people out of
I only have 1 minute to break. So let's just quick get a round table. Are people going to be able to get a loan for student loans in the next 12 months?
No.
You're going to be able to say, no. You won't be able. So what happens to college tuitions? Are they going to plummet?
Yes,
well,
they will.
they have to. Yeah,
in the next 12 months.
The marketplace
in the next 12 months.
Well,
it may take longer than that, but it's going to happen with 18 to 24.
All right, let me ask you this. You're going to be able to sell your house? I lose my job. Am I going to be able to sell my house?
Not at the price you want.
Not at your current price.
Okay, but let's say I have 15% in it. Let's be crazy. Let's say I have 10% in it. Am I going to be able to get my prize?
I doubt it. I mean, the only way you can sell your house is dramatically lower your price. You know, the government keeps claiming that all these mortgages are illiquid. They're not illiquid. If people would lower their prices, there'd be buyers.
Right.
They're only illiquid if you stubbornly refuse to sell at a realistic price.
Because everybody borrowed that much money.
Well, it doesn't matter. That's irrelevant. That was a bubble. You can't get bubble valuations for tech stocks anymore or internet stocks. Most of them are worthless. But the real estate bubble is just as big.
Even that, the vintage, the 2005, 2006 vintage mortgages, those are trouble. But you tell me somebody who's been sitting on 15 years of a 30-year mortgage is still demanding.
Okay.
I want $800,000.
Gotta go. We got more of your calls and your questions coming up next.
The action Congress took today is a tourniquet. It's not a permanent solution. Our economy is still hurting, and hurting badly. Further action is needed, and it shouldn't take a crisis to get this country to act, and this Congress to act in a bipartisan fashion.
You know, let me go to Stephen Moore on this one. By the way, a full night of questions on the economy. You can get in on the discussion. 877-SAY-BECK. That's 877-729-2325. Stephen, I think John McCain made the biggest error any politician has ever made by not coming out and saying, at least not with all of this pork. It's not working. It's clearly not going to work.
Yeah, I think he's going to pay a high price, Glenn, for not coming out against this bailout proposal, not just because of the $700 billion price tag, which a lot of American taxpayers are scratching their heads wondering where that money's going to come from, but also, as you just said, all of the pork that was added to this bill in the last few days to win those last votes that they needed was a fiscal disgrace. I mean, you talk about the bicycle paths and the money from the run runners and all of this stuff. I think it makes Americans just sick about politics, and that's what John McCain is supposed to be running against.
But you know what? What kills me, and I'd love to hear from you guys on this, is anybody who says right now, oh, well, you know what, I'm going to take care of that Social Security and we got more health care coming, where are they going to get the money?
Yeah, where you basically bootstrap yourself for what? The first 4 years of the next administration? I mean, put a time frame on $700 billion. The problem with this deal is nobody knows what we're buying here, because we've never done this before. $700 billion, still don't know where that figure came from.
McCain is right. The economy is down on the ground, flat on its back. But what this bill does is it kicks it in the groin. I mean, this is ridiculous. I mean, he missed an opportunity to blame these problems on government, to blame it on the Federal Reserve, to put the blame where it really belongs, and then differentiate himself from Obama, and then talk about real change, changing this monetary and fiscal policy that created this mess, not buying into the liberal agenda that it's the greed on Wall Street that's the problem, that big government is the solution, because he loses that battle.
Well, I can't believe that nobody is talking about this. Do we have the clip by any chance of Alec Baldwin on Bill Maher this last weekend? You got to see this. We'll play it for you when we can. It's unbelievable. Alec Baldwin is saying, you know, guys, the Democrats had a lot to do with it. I mean, America understands somewhat what's going on here, and yet it seems like the politicians haven't caught on. Let me go to California, speaking of politicians that haven't caught on yet. Susan in California. What's your question, Susan? Susan, are you there? All right, let me go to Irene, who is also in California. Hello, Irene. Okay, obviously the problems with the phones in California have got much...
You know, Arnold can't pay his bills, Glenn, and this is the first indication. The telephones are breaking down.
You've just written a piece in the Wall Street Journal about California. Yeah. Tell me what California has done in the last 3 weeks before they asked us for this bailout.
Well, this is an amazing little story. Arnold Schwarzenegger signed a Democratic budget that they knew was $7 billion in debt. This is a state that is supposed to be living under a balanced budget requirement, Glenn, and he signed the budget with all the excess spending. And guess what Arnold did last Friday? He wrote a note to Hank Paulson saying, congratulations on this big bailout package. Then he held out his tin cup and said, by the way, can we have $7 billion of that to pay our budget? And now you've got a number of governors who are coming to Washington same way, saying, give us some of this free money.
But we don't have any money. We're broke.
You know what? Look, here's the thing. California does have money. California has oil. I introduced today on my radio program the Glenn Beck Go to Hell, California Act of 2008. Here it is. When you get your budget under control and you start drilling for oil so you can make some royalties on that, then we'll sit down and talk.
Glenn, even the city council in Santa Barbara, one of the most liberal places in America, wants to drill. So, you know, they're finally waking up. If they want us to fund these programs, they're going to have to drill some
the problem is the federal government's the only one with the printing press. So everybody is saying, look, you're printing up all this money, print up a little extra. All these states are going to be in trouble. They all have bloated bureaucracies from the phony prosperity of the bubble years, and they don't want to lay off government employees. They're not going to get the tax revenue, and they can't even borrow because the Chinese and the Japanese and the Saudis don't want a loan in California. All they want to buy is federally insured paper.
All right. Let me go to let me see what Irene, are you there now in California?
Yes, I am.
Hi,
Hi,
Irene.
Glenn.
How are you?
I'm doing just fine.
We were just saying very nice things about your state.
By the way, we're supposed to vote on something in California to blow almost $10 billion on a new train system.
Oh my God.
It's a good luck on that one. I hope it keeps you warm in there. Anyway, what's your question?
My question is, I'm concerned about the safety of the big mutual fund houses like Vanguard or Fidelity. A lot of folks have their retirement funds there.
I mean, more important than the safety of the funds is the safety of the investments the funds have made. I mean, even if the funds don't go out of business, what about all the stocks, the overpriced stocks and bonds that they've invested your money in? I mean, that's what you should be concerned about. And then the value of the dollar.
Well, I think most people are probably concerned, are these things going to go away the way Bear Stearns went away, the way AIG went away? And if there's some comfort to be taken from any of this, it's that your mutual fund is not going to evaporate overnight. You're not going to wake up some Monday morning and find out that the government has taken over Fidelity or something wacky like that. But as Peter said, chances are pretty good. You're about 30%, less rich than you were in October of last year.
All right, let me go to Susan in California. Hello, Susan.
Hello there. I've got a comment for Glenn. Husband and I love his show.
Thank you.
We both spent combined more than 40 years in the service.
Wow, thank you.
Retired. When we were still active duty, we saved our money.
And moved to California.
I moved to California, bought a house, didn't use it like an ATM.
Right.
And now we're just losing money from our savings. So we're like many other people. Who's going to help us?
Right.
Well, no one's going to help you.
This is the average person.
Unfortunately, you're the people who are going to get caught. You're going to get slaughtered as the value of your savings is going to be wiped away to inflation as the government tries to help out everybody else who leveraged themselves up to the hilt, who bought their houses with little or nothing down, who refinanced 2 or 3 times to take vacations they couldn't afford, to buy cars they couldn't afford, who are up to their eyeballs in credit card debt and auto loans. Yeah. Those are the people the government is trying to help. But in helping them, they bankrupt everybody else. And ultimately, it's going to hurt everybody because our entire economy is going to collapse.
Stephen, hang on. I'm going to get your comment here. We'll be right back in just a second. All right, we're wrapping up our calls tonight with your questions on the economy with Peter Schiff, Stephen Moore, and Bob O'Brien. Stephen, before we went into the break, you were going to say what?
Yeah, well, I was talking about this woman who called in from California. The problem is what we do in Washington is we reward vice and we punish virtue. So the people who played by the rules, Glenn, the people who paid their mortgages on time, paid their taxes, didn't get up to their eyebrows in debt, they are the ones who are now suffering the consequences. They're going to have to apply there's no fairness in this. I mean, that's the point I'm trying to make.
And that's the biggest problem. We already have disenfranchisement in this country where people are pissed off. They feel alienated. They feel like nobody's listening to them. When you have Barack Obama, Stephen, correct me if I'm wrong, Barack Obama is saying that he's going to give tax cuts to 95%. 45% of the people that are going to get a tax cut don't even pay taxes. They're going to get a check generated from Barack Obama and sent to them. They don't even pay taxes.
But the truth of the matter is no one's going to get a tax cut.
I know, exactly.
Under
They're
Obama.
tax cuts.
I mean, we're spending trillions of dollars. Where's that money going to come from?
Right.
They're going to print it. Everybody's going to see the cost of food go up. They're going to see the value of their wages debased because of all the inflation that the Fed is going to have to create to fund all this Obama spending.
Okay, that's a question I'd wondered for quite a while now. We've seen energy prices in the crude market come down 40%. Why has it been so slow to work its way through to the retail level? Are you paying 40% less for oil when you pull up to the pump? Are you paying half as much for cornflakes?
But those prices aren't going to stay down. This is a function of liquidity right now. Oil prices are going a lot higher. This is temporary.
Let me tell you something. Oil prices are going to go a lot higher, gang, because Russia can't afford to have oil prices this low. I think you are looking at, again, the perfect storm. You have people that need that oil price coming up. I think the whole world is going to be destabilized for that very reason.
Well, especially when the Chinese, look, when the Chinese finally come to their senses and revalue the yuan higher, all of a sudden you're going to see an explosion in demand for energy out of China, and those prices are going to go ballistic.
Okay. All right, we're coming back later. Of course, we're going to cover everything for you on politics and the debate and everything tomorrow night, along with the economy. And then later on this week, we're also going to be covering how the hell did we get here? Who the heck put us in this situation? And you know what? Everybody has blood on their hands. Don't listen to any of these politicians say, oh, it's that guy. He didn't have anything to do with it. Yeah, they did. Both sides did. And you know what? We also have to take the blame. The question is, are we going to start being responsible Americans? The answer better be yes. From New York, the financial crisis capital of the world. Good night.